there's a real gap in building a development company, an E&P company that is really poised for what the future is bringing with respect to tech. And so how you do that, and it's a complex, you got to raise capital, you got to build the company, and you got to do that in a way that, interestingly, my thesis is built on how Amazon built their business, which is
That's
a lot
interesting.
what and it's a lot built around this idea of, Shell and BP and Exxon, all the super majors, they've all used a growth engine of reinvestment of cash flow. And I think one of the things that I misunderstood early was that the decline curve was unique to oil and gas. It's actually not. Decline curves are unique to every business. If you aren't growing, you're retracted.
Yeah.
Nobody, ARRs, like let's take a software company, for example, that sells subscriptions. You don't keep 100% of your subscriptions year to year. You're going to lose 30% of them. That's a decline curve.
Yeah.
So
you better be adding 40.
That's right. To grow, you have to net grow. You have to add, if I want 30% growth, I have to actually grow 60% just to cover what's going to lose, what I'm going to lose. So there's a lot of similarity. And I think being able to understand how to grow and then connecting around the demand that is going to drive the ability to grow, that's where the PetroVybe thesis came from, particularly as it relates to AI, data centers, and the need for natural gas, and really that challenge of access to natural gas. Not like we don't have a lot of it. I mean, it's, prices still are terrible in the Permian. So,
I guess it's like the whole concept of, where's natural gas, but also where is a viable data center? Where can you construct that? I mean, I read, this morning press, it got to -10 or something like that in the Permian, with natural gas, right? Or something crazy. So, I mean, it's practically, it's more than free gas, right? But
I'm sorry. I didn't mean to cut you off. Go ahead.
No, but it's like, but then you have all the complications of all the other 40 things that have to line up for a viable data center to be constructed. So I can imagine for you guys, like, how do you find that place where you can get those viable, meaningful, long-term natural gas assets in a place that you can actually build and construct, or get that product into a pipeline that feeds a data center? Like, how do y'all go about that?
Yeah, so you have to be sensitive to the time and the timeline and the time value of money. That's still the challenge for the Permian specifically. Like if you're working that for a data center play, which I can't remember the name of the company. There is development out there, but it's still difficult. And the reason why is because the infrastructure isn't there. The whole problem with the Permian from a gas perspective is the infrastructure just doesn't support the supply. So it's trapped. And the more valuable commodity coming out of that area that the infrastructure is in place for is the oil. And so you're kind of in this walled up, albatross of I can't get it out and I can't even hardly store it. And so that's why they've been flexing on, regulations with respect to flaring and things like that. I mean, it's certainly been an improvement, but there's just a lot of challenges, complications. But you really have to go, because time is so critical, you have to go where the infrastructure is. And that's where you get into this idea of knowing, okay, where do I need to be? Which is why we're in South Texas and East Texas. We can compete better because we're small. We can also, we have access to where the supply is not trapped, where it can actually get out for a profit. And that brings us to the importance of your area of expertise, which is the land. And that creates a whole new bag of issues because you guys know better than I do. East Texas is very unique.
It's something, all right. Yeah, I mean, it comes with its own challenges, right? I mean, where your problems in the Permian Basin are B2B oriented, right? It's contractual terms, leasehold ownership, all those complications, right? Severances of horizontal ownership. You go to East Texas, it's person to be.
That's right.
It's people to be. You got people problems, you got airship problems, complicated title, complicated legal descriptions, much smaller parcels. So, you can get by with a dozen or 2 dozen tracts of land in West Texas for a pretty decent asset. You may need
Yep.
200 in East Texas. And so that's
Yeah.
200 instances or 600 instances of some variable that you got to navigate. So, I mean, there are challenges from the land standpoint, but you're absolutely right. It's this kind of interesting observation. You got endless natural gas out there in the
Yep.
Permian. And could we build gathering and all that stuff? Absolutely. But you got to have a financial incentive to build gathering. You know what I
Yep.
mean? And
Yep.
money. And then you have to have time to do that. I mean, we've been talking about natural gas takeaway capacity in the Permian Basin for 10 years now.
Yep.
It's like
Yep.
we have all this product's there, but the market just doesn't support it. But the data center demand, I mean, when you read press, right, on data centers, it's, it's going to affect the everyday consumer. It's going to affect the community and your electricity prices and all this, that, and the other. Well, that's going to put a lot of pressure on business to find a way to get that product.
Oh,
And
massive.
that's going to be the thing. And I think we all know, and I think you guys are in a great position as far as how you're looking at it, to be like, all right, how can I get in this game? How can I be a data center forward kind of operator, but also be positioned to capitalize maybe 5 or 10 years from now when that infrastructure builds out to meet that demand,
Yep.
to satisfy the cries of the public, right? Which
Yeah,
are
but
justified.
you're 100%, and it's a friction conversation. Like nobody wants to be the billions that it would really take to free the trapped gas, so to speak, in the Permian. Is it's friction, and it's high cost friction, and that's where the difficulty comes in. I mean, like they have a pipeline coming on, a new pipeline coming on in the Permian for gas. If I read this right, I want to say it's in June. Anyway, that it's already spoken for. Like, and it's
It's
apparently
full.
making, yeah, it's not even making a blip. So again, it's not that those things aren't happening, but they're only going to do those things when people can profit from it. It's all an issue of friction, but that's why you're seeing big tech players make these acquisitions, and they're literally becoming power companies. They're
Yeah.
becoming producing companies. They're buying into the supply chain, and that's some pretty interesting multiples, bringing M&A activity and values back up in the E&P space. So I think if I'm a landman and I'm sitting, in this space looking at where the opportunity is, I'm really following the businesses that have the money. It's always follow the money. Where is the
Yeah.
money going? Where's the money? Where is it going to get to profits fast enough? And that is where there's the least friction. And I think if I'm a landman, I'm chuckling. I'm going, you really think East Texas is lack of friction? Well, it's all relative, right? And so, there's still South Texas, which the Gulf Coast Basin. I just read yesterday, I can't remember which super major it was, but big discovery in the Gulf of America, and bringing some renewed interest and energy, probably even capital to that discovery. And so I think, as I'm thinking about what are we doing, it's going to be the path with the least friction. And Texas still is the best answer for that. But you're seeing that up in the Northeast a little bit as well. It's not like Pennsylvania is off the chart here. They have a play in this as well. And so I don't know. I think it's a bright future for. If I'm a landman, as an example, I think it's a bright future for a lot of opportunity. You gotta pay attention to where you need to be, where you can leverage your relationships on both sides of the fence, right? Knowing the landowners, but also knowing the people inside the industry to be able to put deals together.